To line up our next speaker, we move back to the African continent. And a story that I remember Elizabeth telling at last year's Bitcoin conference is a classic example of innovation or ingenuity coming out of frustration. Was Elizabeth trying to make payments with her American credit card in the depths of Africa and not being able to do so, and then thinking, I need to create something around this that makes our lives easier. And that really, in a nutshell, is the story behind what Elizabeth is doing in South Africa. So please put your hands together. Welcome, Elizabeth Rossiello.
Thanks, Ian. You make me sound like a desperate shopaholic. Okay, so I'm glad we're doing this here in South Africa. If I presented after lunch in Nigeria, everybody would have been stuffed with jollof and like snoozing. So hopefully we're a little bit awake. Last year when I came here, I talked a bit about BitPesa, which is my company, and I'm going to introduce that in a bit. But so much has happened, not just in the ecosystem, also in African financial services, regulation, and inside our company as well. So it's quite exciting to come to these conferences and see the evolution of what's been happening. I started BitPesa in 2013 in Nairobi, Kenya, and since then, it's been almost tenfold growth of what's been happening. Every time I go back to the US, I see companies leave and companies come in, but we're starting to really see a maturation of the ecosystem, and it's quite exciting. So I'm going to talk today a little bit about my personal experience with BitPesa and how we've approached over 7 regulators in sub-Saharan Africa, all the crazy responses we've received from them, some of the experiences we've had, the good, the bad, and the ugly, and talk to you a little bit about what we think, or what I believe is going to be the future of regulation here in Africa for any company dealing with Bitcoin or digital currencies. So let me talk a little bit about my own company so you understand where I'm coming from. So I'm a banker by trade. I worked on the largest foreign exchange trading floor for Credit Suisse in Zurich. At that time, all of the foreign exchange business globally was moving to Zurich. It was inside prime brokerage. And I dealt with all sorts of funds right before the financial crisis who were trading in FX, who were using this big bank not only to settle, but to loan, to do clearing, to do derivatives, forwards, backwards, everything, structured products. And they were relying on all these financial services that this big bank could offer their smaller banks or their smaller funds. Fast forward to 2009, I finished paying off my student loans and decided to take some adventure. So I applied for a job in microfinance, and the company sent me to Nairobi, Kenya. So in 2009, I moved down to Nairobi to lead the office of a French rating agency working in microfinance. Talk about the other end of the stick. So suddenly, instead of talking to Swiss hedge funds, I was now sitting in rural Uganda with the savings and loan group. And what did I learn? The same thing. You know, building products for customers, understanding what they need and what kind of services you could offer them. And as I visited these microfinance banks, I realized there were so many add-on services as each client grew. And it got to be quite exciting to see some of these banks move into the SME sector, move into the urban area. So you had Nigerian microfinance banks suddenly doing cross-border products. Now the regulators hadn't really been paying attention to microfinance, but suddenly they were taking deposits, they were offering credit, they were cross-border transactions. So there came a time in sub-Saharan Africa, in East, Central, and West Africa, where all the regulators started to understand this needs to be a regulated ecosystem. And there were several different options for that. So I worked with the regulators at that time. Fast forward a few years later, I ended up starting BitPesa because I thought that once these clients outgrew microfinance, how do they then trade from Kenya to Dubai? How do they trade from Guangzhou back to Lagos? Who was servicing them? Who was giving them these needs? They clearly weren't going to be using Credit Suisse. And it wasn't as if they had all the options of maybe someone living in Cape Town or Joburg. But this was the largest growing middle class, so some of the largest GDPs. What about FX services for these demographics? And originally, everybody labeled our company a remittance company because they thought the only financial services for this whole chunk of the continent must be remittances. But what we learned when we started our product, and we were the first company to offer Bitcoin to Kenyan shilling, and we paid out through M-Pesa, which is the mobile money quite popular in Kenya, was that a lot of these customers were not actually using it for remittance. They were using it to pay salaries for businesses that they ran while they were abroad. They were using it to import, to export, operations for new companies, moving their own funds backwards and forwards to different countries they lived in, it was kind of way beyond remittances. And so after our first year, we started moving up the chain, servicing bigger and bigger customers, working with a lot more businesses. And right now, we're focused on providing wholesale access to African FX. That means if I'm a company in San Francisco and I work in 4 East African countries, how was I previously getting that money into those countries? Well, now using Bitcoin, you can actually become part, you can access those countries, you can get that fiat, you can pay it out in a much more efficient way. And in our first few months, we were 1/3 the cost of bank treasury rates. In Nigeria, where you have a dual currency right now, with what we call the aboki or the black market, and also the central bank rate, we're offered to make our own market in the middle because we buy and sell this currency. So suddenly we were offering a cheaper, faster, easier solution because we were using this infrastructure. We became the largest Bitcoin broker in East Central and West Africa. So by using Bitcoin, I'm sorry it's not attached to CNY, I don't know what happened there, we can communicate with brokers all over the world that actually accept Bitcoin. So we really use Bitcoin as a way to communicate with other financial services institutions. And I believe this is the way in the future. All of your banks will have Bitcoin on their treasury desks. If it's not called Bitcoin, if it's called Ether or Litecoin or Settlecoin or whatever it's called, it'll still be on this ledger that we've been talking about so much today. There's no way we're going back in time, and it's way more efficient. If any of you work in settlement or treasury, you'd understand that. So when I then want to make a market with CNY to Naira, I can call a broker in Hong Kong or in mainland China that accepts Bitcoin, and I can settle with them and turn around to my customer and offer them a better price than if they would go through the banking network. How did we build this company? Well, we're a startup that's 3 years old, but if you're going to be in a fax, if you're going to be in a financial institution, we had to have a heavy infrastructure. Now, we've done this a lot more lightweight than a lot of banks, but it's not as lightweight as somebody trading in their garage. So we've actually done local company incorporations in 6 African countries right now. We've got 3 more pending. We have a licensed entity out of the UK, and we have a top co in the Caymans. Now, why in the Caymans? Most East African countries, most East African companies that want to go offshore go to Mauritius, even the Seychelles, but they don't have offshore entities for financial service companies. So suddenly, because of a regulatory situation, we're now left hunting for a regulatory top co-location. So that's what happens, and that's the kind of barrier to entry when you're looking to provide a new financial service. Some say that's warranted, others believe it's not. Right now, Luxembourg is becoming a hub for topcos for Bitcoin. There are maybe 10 Bitcoin companies in the waiting list for getting a license in Luxembourg. So you're starting to see new jurisdictions open up and understanding that this is the bank of the future, as Marcus said this morning. Banks will look like this. They will be looking a lot different than what we know. So how do we build a company so quick? I mean, with almost very little financing, we've raised $4 million to date, which is a lot for an African startup, but not a lot for a lot of big financial institutions. We've opened up 5 offices. We're live in all those markets listed. And we've got a full-time team of 25. Well, most of that is because we use Bitcoin as much as we can in our company. So I pay my salaries to all my global employees, most of my contractors around the world. It's just an easy way to run your company. So using this infrastructure actually makes my company more efficient. And I believe if some of the microfinance institutions or banks that I used to work with had a more easy way to move money around, a better infrastructure, they would have been a lot more efficient. I just talked over lunch with someone about how when I talk to Senegalese, where I live right now in Dakar, people don't have laptops. A lot of them are using their phone for everything. They say, send me the file via WhatsApp. They're leapfrogging past the laptop and using their mobile phone for not just money. Mobile money is way in the past. That's not the new innovation anymore, but they're using it for every aspect of their life. You can suddenly build and run businesses, even financial services businesses, a lot more efficiently on a lot less resources. So I know a lot of you in the audience are shaking your head and saying, but how is this regulated? What are they doing? Is this some sort of crackpot idea? How is this legal? How does this get around all these regulations? So let's start there and chat a little bit about this. So Johnny talked a little bit about the money transfer business license and how it's required in all 50 states in the United States. The US has been quite clear. Any company dealing with Bitcoin, moving it between US dollars and Bitcoin, holding it or just exchanging it as a brokerage, has to have an MSB license. In different sub-Saharan African countries, this can be referred to as an MRB, an MSB, an MTO, and traditionally goes out, in most countries, it's dominated by MoneyGram and Western Union. In fact, there was a very interesting report by the World Bank that said MoneyGram and Western Union basically split the globe. And when one of them enters a country first, it immediately partners with the post office, and then that company that managed to get the post office distribution deal is the dominant market share and has costs, or customer retail costs, 20% higher than the other one. Get much more margins. And they actually petitioned these companies saying it was unfair. So oftentimes, getting this MTO license, this MSB license, is not really a fair and open market and a quite high barrier to entry. In the US, it costs about $3 million and over 3 years to get the licenses in almost all 50 states. So very few companies in the United States have actually done that, and those that have are at the top of the game. Other regulatory categories that are pretty clearly defined in some jurisdictions are payment institutions and e-money issuers. The license we have in the UK is for fiat-to-fiat transfers. Now, we explain to them that often we use Bitcoin in the middle, but for all extensive purposes, they see that as a fiat-to-fiat transfer, and it's very clear this is the license you need to get. Now, let's take this into the sub-Saharan African context. Same business model, same team, same customers, same transactions, but a very different approach. So when you go up to the Kenyan, Tanzanian, Ugandan, Nigerian, Senegalese, Democratic Republic of Congo regulators, and you ask for an MTB license or an MSB license, often they say, well, this is for companies moving currency. And they even go beyond that and they say legal tender. So if Bitcoin is not legal tender, it's not applicable to this license. So even if all extent and purposes, the intent of these transactions is a transfer of value, by the letter of the law, a lot of these regulators won't let you even apply for the license. And they don't have a substitute for that. So you're left kind of saying, well, in one jurisdiction, I have to have this, another jurisdiction, I'm not. So at one end of the trade, you can be licensed, and at the other end, there's a lack of clarity. When you go down even further for a foreign exchange bureau, or a bureau d'échange in West Africa, this is actually, again, legal tender, but more specifically, they have very clear laws. You have to have a physical storefront, you have to have a lot of physical things, and there's really no detail about what a digital version of this would look like. So what happens if you just have a website? What happens if your customers are online? Do you not exist? There's no regulation for that. Should we just ignore online businesses, close our eyes and say, well, if there's no storefront, it can't possibly be? You're then blocking your country for a lot of innovation and disruption. E-money issuers related a lot to the mobile money that we've seen. And most of the regulation around that in these markets talks about the store of value, fiduciary responsibility. E-money issuer licenses or non-bank financial institutions, NBFI, regulation are quite similar, but it doesn't apply for Bitcoin brokers. Payment institutions, same situation. Unless you're actually doing the last mile, which is replacing the Safaricom's and MTNs, you don't qualify either. And then the commodity broker, I've heard the word commodity tossed around quite a bit here. You can suggest this to some regulators, but again, you have to prove inherent value, which is beyond the capacity of a lot of the departments and the commodity exchanges that we work with. So if you don't fit into these regulatory categories, where do you go from there? To the gray zone, which is where I live. So does that mean that you're illegal? Well, there's no specific regulation against it. There's no specific regulation for it. How do you live in the gray zone? Well, many kind of actors can live in the gray zone. A company that ignores all rationale and logical thought, or a company that self-regulates or mimics the regulation that other counterparties have. That's where we live, or where we've chosen to live as BitPesa. We actually follow all the rules and regulations as if we were regulated, almost like that lame guy waiting outside your house for you to come outside with a bouquet of flowers. We actually mimic all of the requirements, the core capital requirements, the reporting requirements, because we believe someday it will be regulated. And we actually work with regulators and institutions doing just that. And that's what happened in the microfinance sector. Most companies acted as if they were regulated before the regulation occurred. But what happens in these markets when different regulators view your business model differently? We've seen some of that in the United States, where early on some states made statements differently than others, but then one regulator kind of made the final decision. But that doesn't happen in a lot of sub-Saharan African markets where there's no clarity or hierarchy of power. Now, let's talk a little bit about an anecdote that just happened to BitPesa. Maybe many of you have read about it, and that we were in litigation with Safaricom, which is the creator and operator for M-Pesa, a very large mobile money distribution network. Originally, one of the 10 mobile money companies that we work with, we have 40 banks that we distribute to across 4 countries and 10 mobile money. That was the first one that we were using. They weren't so happy anymore that we were doing advertising about cross-border payments, which is a new product that they also released. So they cut off our float account and our access to the M-Pesa network. And they said, you need a license. And we said, which license do we need? And they said, we think you need an MSB license. And we said, well, the regulator says that that's not applicable. And they insisted that we need that, but the regulator didn't. And we went to the judge, and we said, well, we can't get it. And the judge said, well, I don't know what you need either. So now we're in a situation where a stakeholder, okay, fair enough, it's a monopoly in a very unique ecosystem, is more powerful than the actual regulator. So where do you go from there? And what about international authorities? I mean, definitely we have some US authorities in the House today, but I mean, we often get phone calls or emails or visits from international authorities all the time, even though we don't operate in the United States. What does their influence hold in sub-Saharan Africa? Often, when we talk about what happened to us at the CBN, which is the Central Bank of Nigeria, to the CBK, the Central Bank of Kenya, it's almost a rivalry. Well, they gave us a verbal approval. Well, what did you give us? You know, what did your legal department say? So rather than actually a cooperation, it's almost a competition. So again, operating in these areas, you can say stay away, or you can say there's a tremendous opportunity here to be the first in these markets if you play by international standards and you believe that eventually the standards will come to the region. There is one tool which you have in some of these markets that companies like M-Pesa received. So Safaricom and M-Pesa, when they started, there was no regulation. For almost 4 years, they had literally nothing, just a gray area. They were holding balances, they were growing billions of dollars of float that was not technically supposed to generate interest. They were doing all sorts of banking services. Finally, after a few years, they did get a letter of no objection before the actual regulation came out. And many African regulators will have this kind of option. But what is it? It can actually mean, well, it's almost like a get-out-of-jail-free card. It means a lot of different things to a lot of different banks. It can take, sometimes like in Uganda or Tanzania, it can be almost mythical. Like no one's ever received it. It can also take a few years. Many stakeholders don't even recognize it. But most importantly, for a startup or a new entrant into the space, it often requires a bank or telco sponsorship, which if they think your product is competing with them, they'll just squash you to start. So how do you enter these markets without a bank or telco sponsorship? Now, we've entered each market differently. Sometimes we've had a telco sponsor us, like with Airtel in certain markets. Sometimes we work with a bank switch, like in Nigeria, and often we go in alone. But there really is no cohesion across the space. So this is the flow of one of our products, a Treasury trade. So when it leaves the United States, or Canada, or Mexico, or the Philippines, or often China, it has to be processed from USD into Bitcoin by a licensed broker-dealer that has the licenses we've discussed. They make the trade from a US bank account by ACH or wire and get it into Bitcoin. That consumer then sends the Bitcoin to themselves often. We deal with companies that have Kenyan incorporations and the United States incorporations. So they'll send, like a jewelry company we work with is incorporated in the US. They'll send it to their Kenyan counterparty, so an intra-company trade. And then that company will approach us and ask us to make a market for Kenyan shillings. Now, for all intents and purposes, we believe this is almost like a money transfer trade. But because it touches that green dot in the middle, a lot of regulators say it's been voided. Now, personally, it doesn't make a lot of sense to me, but this is the view of a lot of the regulators. So how do we work with the education to understand that just because it uses the internet or goes into the cloud for a second, it can come right back out? Especially if the US bank and the Kenyan bank are regulated, and the licensed broker-dealer and BitPesa are following AML and KYC standards. This is essentially taking an open infrastructure and making a closed transaction loop. So how do we close the transaction in an open network? And why do we need to do this? Taking us back, there's been very little product innovation in the FX space in the region. You see a lot of banks with very high margins on their treasury trades. A lot of companies come to me and say they can't even operate in these markets because they can't do so efficiently. And when they go to Southeast Asia, it's a fifth of the cost. Who do they work with in these markets? The payment ecosystem has kind of developed organically, and each country looks very differently. Sometimes you have aggregators who can access all the banks, a super aggregator which accesses banks and mobile money, and sitting on top of that are global payment systems that are collecting the clients globally. So you start to see 2 or 3 counterparties on top just for the last mile payout. We see FX spreads of 10, 12% for inflows, and a lot of unreliable last mile settlement. Already from day one, when we were still working from my couch, we were offering better pricing than all of the leading incumbents. Now you can say that there's been lack of trust in the system. We talked a little bit about that today. But what BitPesa does again is close off its system. So what we like to say to regulators is, if you want to work with a company that deals with Bitcoin, ask them to finally close their system off. So letting customers come to us, collecting their KYC and AML, checking it against international third parties, the same ones that Western Union and PayPal use, scanning sanctions lists, PEP lists, taking photo IDs, watching limits. I mean, we ourselves gave the first SAR report ever filed in Kenya. Can file the same sort of standards that you have and make it as compliant and as easy. And when you look at it, even in our very early days, the efficiency is there. So what does this do? You know, BitPesa itself is no longer doing actual retail remittances, but we offer these rates and lower to other remittance companies. You have a TransferWise or a Zoom or a PayPal coming into these markets, they can't find those rates. Look what happens with PayPal. PayPal made a proprietary deal with Equity Bank Kenya, and they take those rates. That's how high the product costs for any kind of payout, and you need a US dollar bank account to do so. So where is the infrastructure to allow the innovation to come into the market? So a bit of a short presentation, but I thought maybe you had some questions.
Great, thanks very much, Elizabeth. We'll start in the front.
Hi, Elizabeth. Thanks so much for the talk. It was great. My question is on the link between the cryptocurrency and then the availability of the consumer to access the internet as a barrier to using the currency. And based on your experiences, would you say that people, because from what I've heard, and I've done some traveling in Africa, but probably not as extensive as you, it sounds like you've been to all sorts of dodgy places.
Beautiful.
Beautiful. Do people then access the internet via the mobile network? Or, I mean, I know that Wi-Fi is hardly available there, so is this a real barrier in Africa? And is this one of the things that's going to have to be overcome in order for the masses to then start using this amazing BitPesa service?
Okay. 2 things on that. Let's start with one. BitPesa now actually deals with customers who do trades at least of $350. So this is not for a rural farmer. I'd say it was for an urban or peri-urban user. Usually our customers are between 22 and 35. They're either independent traders, or they run businesses, or they're a junior treasury person at a big institution, or they're a social enterprise in the US or Europe that wants to work in the region. So we're not dealing with rural shareholders. That said, one of our first investors and our board member was the former head of Google Africa. And he's responsible for electrifying and connecting entire towns in Uganda. I mean, the difference living in Nairobi in 2009 and now is unbelievable. I'm never offline, and pretty much everywhere you go. I mean, they have this great, Safaricom has this great billboard that has like a Maasai surfing the internet, because it's true. You can be on Safari and connected, and data is super cheap. I just moved to Senegal, and data there is like $2 for a month, 3G. So I mean, I think the data access and cost is a problem that's going to go away in the next 3 to 7 years.
You say it's mainly for the unbanked, right? The system.
I said the opposite.
This is the opposite. Only for banked.
Yeah, I mean banks, but the banks are not offering the rates that these customers want to use.
Okay. So what MPs are saying is basically Africa, most of Africa is unbanked, and they are focusing on those people. Do you see them as competition, or do you see it as the banked is a growing industry and the unbanked is a shrinking industry?
Okay, let's take a step back for a second. So the population, the percentage of the population that's gone from unbanked to bank went from, I think, 32% to 70% in just 3 or 4 years in Kenya. I think someone just said this statistic the other day. The South African scheme to distribute pension and social benefits that got put online by MasterCard, I think banked like 50% more of South Africans just with that alone. So unbanked, again, is an issue I feel is going to go away very soon. You also have a percentage of the population, like the northern nomadic part of Kenya, which is never really going to be banked. They have options to be banked, but they're financially inactive. Right now, we have a problem of overbankedness. I mean, even my last days of microfinance, 2010-11, you'd go into a consumer group, and they'd have 6 different loan applications. So they were like overbanked at this point. M-Pesa, Mobile Money, MTN, they're doing last mile distribution. They're removing cash from the last mile. I will always use those last mile networks, whether it's actually a debit card, or it's a mobile money system, or it's a tap and go. I mean, I'm not interested in building those last mile networks. But when you once get from those last mile networks and you want to now buy some electronics from Dubai, how do you do that? If the last mile is super easy and super digital, but then suddenly you have to go and ask your bank, and I do this all the time, in Kenya, and say, I want to buy some yen, or I want to buy some Canadian dollars, they call like 4 different brokers, who then call 4 different brokers, and it's a super clunky system. So how are we solving cash and last mile distribution for rural farmers in East Africa, and we're not solving the whole middle layer, the manual processes? When you call your bank and say, and this is the anecdote Ian was saying, I was getting paid in the US, and I was working in Kenya. Every day I'd ask Citibank, at the end of the month, I'd say, please send my salary to Barclays, Kenya. They'd say, great. 10 days later, I'd call them back and say, where's my salary? And they said, oh, we called you on the phone to do a KYC AML check, but you were sleeping. I said, you called me in the middle of the night. I said, can't, and they said, the wire was canceled. It was a very manual process. Or when it would show up, I'd call my Barclays Kenya bank and I'd say, where's my wire? And they said, let me call the wire room. And you literally hear somebody shuffling through papers. I mean, in this day and age, I used to rate these banks. I would go inside and see huge banks, huge portfolios using very manual systems. Or even worse, it was on a proprietary ledger using Oracle or whatever, or T2, whatever it was, that they had received from HQ or from a donor, and there was one teenager in the IT department running the whole thing. So yeah, okay, they're computerized, but how stable was that server? And I said yesterday at Cards and Payments, I said a proprietary system is almost always corruptible by an employee. That's the first thing I would check on an audit or a rating. I mean, even the biggest systems, when I was at Credit Suisse, they had their own system and their big stone walls. Directly across the street at Paradaplatz is UBS with their own system. How is it that a totally two homogeneous populations, Swiss male bankers, are using 2 totally different systems, and they have to go through a very manual way to send a wire back and forth? Some countries, some regions, like the SEPA system in Europe, is great. ACH still takes 3 to 5 days. How is that possible? Moving money in and out of PayPal takes a few days sometimes. Even Bitcoin exchanges in the US take 3 to 5 days to settle. But for me, when I accept or pay out via mobile money, or the wonderful InterSwitch in Nigeria, it's instant, 24 hours a day. So how do we bring that innovative beauty, that leapfrog the ugly ACH system, how do we then bring that international? Sorry, a long answer.
My question is around liquidity. How are you managing to find liquidity in, countries where one would assume there's not a very wide spread on Bitcoin.
I'm making the market.
Against the local.
Yeah.
But I mean, it's difficult to be an individual market maker. You need people prepared to buy and sell.
Life is difficult. So what I do is I open up bank accounts. You saw my corporate structure. I incorporate. I'm a resident director. I have amazing, amazing teams. Some of them you're looking at right now who call all the black market brokers in the morning, find out what the black market rate is, figure out how much Naira we have coming in from our client pipeline, how much Naira we have going out, and we create a market. Last few weeks when the Naira was bonkers, we made a killing repricing every hour. And a lot of the black market traders were only repricing once a day. So we're making a more efficient market than the best hustlers on the continent.
So that's it. You're bridging into the black market.
No, not bridging into the black market. We're looking at them for what the rate is. We don't ever use them. They're our competitors. We're competing with them. So what do you mean? Like, no, that's what's happening.
I'm trying to understand who are you selling your Bitcoin to? Who are you trading?
My
Bitcoin to?
customers. So let me break it down.
Yeah.
I've got a payment company that I work with. The payment company does credit card, mobile payments for e-commerce. They're homegrown, Kenyan, Nigerian, British company.
Okay, sorry, so you're balancing your flows.
Yeah, so that company wants to send pounds to Nigeria. We've got no good way of doing it. I got a company, Black Horse Plastics, is importing plastics. So I make a market based on matching those trades. Now, in some countries where there's less currency controls, I can be a little bit more flexible and move money around. In Nigeria, I certainly don't want Naira building up, so I work very hard to get my customer flows together. And you'll see in one of the slides that our actual customers' growth has slowed, but customer trade size has increased. So Nigeria, like the minimum we do is $5,000.
Yeah, hi. Two questions. I guess the first one, have you thought about white labeling your platform or wallet through an FI or something like that? And then actually, I know that I'm in the minority in Africa with my Apple phone, but I couldn't find an app. So what are you using responsive design? I guess I assume you must have an Android app.
Well, I think you answered your own question.
Okay.
Because we are working on white label products and on OTC trades, we don't use an app. I mean, we're not a retail play. I mean, for us, we don't feel this is a real retail product. We feel like we actually would use Western Union and the MoneyGrams of the world use us. Some other big companies, which I won't name, are already using us. They can't deal in Nigeria. Talk to some of the biggest disruptive fintech companies, and they're not live in Nigeria, the largest market in Africa. And the way they get to Rand is bonkers. The amount of money they're losing going through aggregators is crazy, and I sound like a smug jerk when I go to these meetings. I'm laughing. I'm like, I can't imagine this fintech company, this is how you're getting access to that fiat. But they almost thought of everything except the FX, which granted is nerdy, but that's what we do. So, we're not going to build an app, let somebody else do that. We don't pay for advertising in all these markets. That would be suicidal. What we do is really focus on making a market in hard-to-reach markets. And I spoke on a panel, and Barclays was there, and I said to them, you can't call the Kenyan shilling exotic when you have a subsidiary in Kenya. And that's what I feel is true. That's the real barrier, not to get weepy about it, but that's the real barrier to financial access, inclusion. Companies won't do business in these markets if they can't access the currencies efficiently.
Hi, I've got two sort of parts of the same question. So the first is you mentioned you encountered a stumbling block from Safaricom. So the question is that a particularly common thing, or is the Safaricom incident sort of a one-off thing that's happened? And then the other half of the question is, do you have a problem where, so there's no regulation at the moment, but does that pose a significant threat should banks around the world or governments around the world decide to call Bitcoin a currency or anything like that?
Okay, a couple questions in that. So this is tweetable, so I'm going to be careful what I say here. But I was on every top 10 African startup list for the amount of money I raised, and publicly until I announced it yesterday, we've only been public about raising 1.5 million. We've actually raised 3.9 million. Why is that? Almost all of the Silicon Savannah techie companies out of Kenya can't get a distribution deal with Safaricom. They brought some companies in, like Copo Copo, and turned around and squashed them. So they're not a great partner. They innovated amazingly, they expanded, and then that's it. So yeah, a lot of companies don't go beyond that. I think what's differentiated BitPesa is that we have a diversified portfolio. And also, very quickly we realized the amount of transactions going through mobile money in Kenya was, I think, 70% of our actual number of transactions, but was only 3% of our total volume. So we're getting a ton of tiny transactions that were not efficient for us. So what we actually do is we now sell to the bulk sellers. And we now provide liquidity to the market. And when we were cut offline for, I think, a week during the first process before we then started to sell OTC, the amount of Bitcoin gone through informal or black market methods skyrocketed on local Bitcoins. And we turned around and sent a letter to the regulator being like, hello, this is not being scanned against the PEP and sanctioned list. This is not, nobody's submitting SARs for these. Nobody's flagging this or asking bank deposits. We don't accept cash. So for us, it was a learning curve. That the ecosystem in Kenya is very unique. There's no other monopoly like that on the continent. And also when we entered other markets, we were welcomed with open arms. In DRC, in Senegal, and in Nigeria, we had multiple partners looking to partner with us.
Thanks, Lars. We'll take the last question over there. Thank you.
Yeah, so it seems that your model can only really work from, say, the United States into Kenya. Because in the case of South Africa, there's a 10% of... Sorry, I'm not on. Hello, that's much better. Okay, yes, it seems that your model can only really work at the rates you're stating at 1 to 3% from the United States into Kenya. From my understanding, say, into South Africa, there's an arbitrage of about 10%, bringing GBP into ZAR via Bitcoin. So in order to send money back the other way, you would lose 10%. So your rates would be 13% once taking into account the arbitrage. So is BitPesa being used almost entirely, exclusively for bringing funds into Kenya rather than the other way?
So we make our market, so we're pretty much equal everywhere we go. So before we entered Kenya, and certainly before Nigeria, the spread on Bitcoin and Naira, Bitcoin to Kenyan shilling was sky high. We had an intern, before we started selling Bitcoin in Kenya, we were just bringing it in the first few months, our intern was making a killing selling Bitcoin in Kenya on the side. I think he was offering 50%. The second we went into business, spreads dropped because we provide liquidity and stability to the market. So I know that here, someone told me over lunch that the spreads are quite high, but that's just because there's not a lot of entrants in the market. Once liquidity enters, once trades come, you have to start actually lowering your price. And we've had price pressure already in certain markets. As we trade, as people run their businesses using Bitcoin, we have a bunch of importers, exporters in Nigeria who, that's why we call the black market brokers. We have competition. We have to keep prices low. If you want it to be an effective fiat-to-fiat trade that's at these prices, you stay competitive. And how do you do that? You run a very efficient operation.
Great, thanks very much. Okay, very last question.
Do you agree with Andreas Antonopoulos that say that Bitcoin is the path not to bank the unbanked, but to debank everyone?
One more time?
Do you agree with the idea about that Bitcoin is not the path to bank the unbanked, but to debank all of us?
Okay. I don't think we should be giving Bitcoin wallets to people who are financially inactive or traditionally underbanked, like everybody in this room is imagining it. I don't think that's the first step. I do think there are services offered in banks that should be removed from banks. And I think we've seen that with the TransferWises of the world. Some services maybe are not suited for a bank. Now, maybe they're suited for a really innovative bank and a cool bank that has a great product team. Like, do you guys know Simple in the US? Feeder Bank in Germany? There's some really cool banks out there, but I don't think that an inefficient bank should be offering certain products. And if they do, we'll come into the market and disrupt it.
Great, Elizabeth, thank you very, very much. And please feel free to engage with Elizabeth at any time.